Hi guys, welcome back to another Q4FY25 series. In today's video, actually we will not be covering about any companies because I think I've covered most of the companies that we track. I think I've done it. At least I've tried to do it because in Q4FY25 it gets a little bit hectic over here with too many companies. A lot of small cap comes. I can read everything, but it just becomes a little bit difficult to make video and everything. But having said that, in today's video, this video is more about like what you can expect for Q1 FY25. I will not go very company specific in every in this video, but I will give you an overview of a sector and what you can expect from these sectors that are there. Okay, so I think you will get a comprehensive view about each and every sector. I will try to cover as many sectors as I can. Probably in this video I will do probably like a couple of sectors I will do. We can do this like a series at the end of every quarter. Let me know if you would like it. This is just a first video that I'm making today. If you like this overview of a sector by the end of the quarter, then we can continue to do it for the other sectors also. Okay, so pehla, if you come across any companies, okay, it could be a company that works on tenders or orders from the government. It could be a B2G company, which has a lot of tenders, like I told you, tenders and orders from the government. A real estate company, a company that works in the infra space. All of these kind of company, basically heavy engineering companies also included. If you see that the Q1 and Q2 ka numbers, the sales growth numbers look very good. If you see there is an increase in pace of growth compared to last, like if you see Q1 on Q1 of last year, that is 24 versus 25, had not been that great, but 25 versus 26, it's been really great. And if you see that the pace of growth suddenly you will see increase, kindly go back and check the Q1 and Q2 con calls, because what has happened is in this year, in this Q1 and Q2, we had a lot of things happen. First of all, in this Q1, what we had elections come up. Now because of elections, what happened, right? A lot of all these elections, or a lot of these government offices, they get busy in the election duty. So all these government orders, the approvals and everything, it got delayed, due to which a lot of orders get delayed, and as a result people companies ka sales growth did not go through. So if you see for any company for that matter, Q1 over Q1, you see all of a sudden there is a spurt of growth. Please understand and go back and check in the previous Q1 if this situation, or if this problem was there. Okay, on the other hand also, you need to understand one thing is, last time our monsoon season that was there, it wasn't really that great if you talk about it, because we had a lot of the summer got extended also. Okay, because of which also, if you see a little bit problems weather. So make sure whenever you see that pace of growth increase, there isn't this factor. Usually what happens is the base was lower in FY25, Q1 FY25 and Q2 FY25. If you see, the base is quite lower, and because of this base effect, please, maybe that high sales growth number is coming from that. So make sure this factor is not playing out. Okay, with any companies that you do, make sure you have a check about it. Now I will go with sector specific. Agar hum baat karte, we will talk about it. So the first sector we will do is hospitals, right? In hospitals, again, if you look at it, if you talk about the large cap, mid cap and small cap over here, the entire hospital space, it is a very mixed kind of result. Obviously with the large cap over here, there is nothing much going on because they are a very good, like a 10 to 15% growth engine. But having said that, when you're a 10 to 15% growth engine at 100 to 90p, it becomes very hard for you to get a P rating. On the other hand, the small cap companies are also in that same range. If you have a small cap company also growing at 10 to 15% and a large cap also growing at 10 to 15%, what is the advantage that the small cap gets over large cap? You need to grow at a higher rate in order for a small cap company to get the same valuation as a large cap company. So across the hospital space, if you see, there are 4 hospitals that has done really well. One is Max Healthcare, one is Yatharth, one is Kims, and Kowai I wouldn't say, but I would say these 3. And you can also add Asarfi, but having said that, Asarfi ka right, the problems that are there. Okay, so these are the, I would say, 3 hospitals you can look for, because yahan pe to hamesha the race competition, or the race is always neck to neck between these 3 hospitals. Okay, now other than that, if you talk about the packaging company, a very I would say packaging company and the paints company, the other one is the luggage industry. All of the companies in this sector has been very lull. I would say this entire year there has been no improvement of any sort, because the packaging company, if you talk about Moltec, what's that, TCPL Packaging, Rajshri Polypack, or Polyplex Corporation, since these people are working with a lot of FMCG companies, and आपने तो देखा ही होगा, right? FMCG companies में, whether you take the large cap, you take the small cap, there has been no growth, right? It's been very flat. You see about HUL, Britannia and everything, they're all complaining about inflation, food inflation, no demand and everything. On the other hand, Vector also, if you look at it, which is a, which was poised to be the next Britannia. What did Vector tell? Vector was like, earlier they used to grow by high teens, now they're telling they'll grow by mid teens, right? So the pace of growth is coming down. So obviously, when your client is not doing well, how can you, as a supplier to your client, do well? So packaging, as a result, no. Again, even in terms of baggage, or the luggage, whether it is brand concepts, VIP and all of the other companies that are there, same situation yahan pe. It has been a very very lull or a dull period, to say, for that factor. The demand has not been such great. Similarly with paints industry also, I think it's probably the worst industry out of everybody, because I think that's one industry that's finding it very hard to recover. The best player in the space, that is Indigo Paints, only grew its sales, in like 12% kind of growth rate. So you can imagine, if the best player only is growing at 12%, then imagine the halat of the other players. Okay. Then I would say, in this video, the last sector we will be doing is the apparel and textiles. Okay. Now if you look at apparel and textiles, I will divide this into three phases. The first phase is, the B2B, but specifically those companies that make this fabric, they make the yarn, all of these three. The textile, if you look at it. Now obviously यहाँ पे you talk about, right, a lot of narrative is going on यहाँ पे कि like Bangladesh plus one, America is imposing so much taxes on China. So obviously for all the other retailers that are there in the US, it would be advantageous, for them to source from India than Bangladesh or China, or for that matter. But all of this is just narrative, because when you go look at the ground level, we do not see any of these changes happening, especially with this yarn, cotton or fabric people. There has been a lot of problems. Everybody is facing one after the other problem, either with the cotton prices going up and down, they do not have capacity, or even if they have capacity, it is running at full utilization and they don't want to extend the capacity. Okay. So it's very, I would say, whenever you come across this narrative, Bangladesh plus one, UK FTA deal, US FTA deal and everything, it's nice to hear about it, but I would say for it to get materialized on the ground level, it takes very long time. You need to look into all these things. And now if you look at it in this space, right, if you talk about Nitin Textiles, Vardhaman Textiles, Shanti Spintex, Filatex, Lakshmi Mills, KPR Mills, Sangam Industry, Alok Industry, Century Textiles, Indorama Synthesis, all of these, synthetics, all of these companies, shit, no growth, nothing, take just waste of time. I would say skip this, I mean, read it if you want to, because, you want to answer somebody why it is not working. But other than that, if you look at this entire industry, there is absolutely no growth at all, okay? Just no growth. And other than that, you have the B2B company which are making this, like taking this textile and fabric and converting into a shirt or a other product. Yahan pe obviously you have Kitex and Bella Casa, but again, we do not know how the upcoming year will look for either of these two companies. Then you have Pearl Global Limited, which is targeting a 15 to 20% kind of growth engine. We have Thomas Scott on the other hand, where again the growth rate is very high, but we do not know, why the operating level, the OL is missing, or what is the capex happening, kahan pe the receivable days are getting high, what is really happening with the company. It is a big question mark over here. Other than that, if you see PDS Limited, growth rate has reduced. If you look at Gokul Das, Himmat Singh Ka Seede, Indocount Industries, very very terrible condition, because all of these companies, if you see, they have a huge part coming from the Northern American markets. And as you know, because of this trade wars that is happening and Trump ka situation that is happening, these people are very fearful about what is the future of the company going to look like. Even the management itself is not really sure about how things are going to go forward and how they're going to proceed. So that is what I would say. B2B is again like not a again, very few companies, not everybody in the lot are doing well, only few companies over here doing well. I like I told you, Kitex, Bella Casa, Pearl Global Limited, and Thomas Scott. I would say these are the four companies that are worth studying and worth looking into. Okay. So I would say this is more or less, you can expect from the B2B B2B space. Other than that, I don't think there is anything else. Like B2C, I can cover it in another video, trying to give you an overview of what is happening over here. We can also cover other sectors such as FMCG, jewelry, watches, wire and cable, logistics and everything, and I can try to give an overview. Let me know if you like such videos, so I can make I can keep continuing to make them. Okay. So yeah, that's that about today's video. Also, small reminder, reminder that, if you haven't got the investment checklist workshop already, because we are going to be hiking up the prices of the investment checklist workshop starting from tomorrow. And if you haven't already got your hands onto it, get it today before it's too late, because I can vouch you, like, that's the best product out there in the market. And you will be able to analyze. See, Q1 is going to come. Q1 is going to start in just what, like 15 days. July 15th onwards, we should see Q1 ka results coming up. And if you want to understand how to, like, just go through the PPT, how to go through the con call, and what exactly to pick, because I would say the entire PPT and con call, right, when you go through it, it is like a maze, it is like a puzzle. And you are, like, that person who's trying to, like, find the way through the puzzle and try to get the big picture, try to get the full picture out of this. And if you want to understand this, how to connect the dots, what to exactly look for, and how to infer it, get the investment checklist workshop before it's too late. Okay, so that's that for today's video. I'll see you again in tomorrow's video. Bye.